Well, the trade dispute between the United States and China deepened this week with the administration of President Donald Trump preparing to extend 25% tariffs to roughly $300 billion worth of Chinese imports. This on top of some $250 billion worth of imports already targeted earlier.
Now, Beijing, for its part, said it would retaliate by targeting nearly $60 billion worth of American goods with tariffs of between 20 and 25%, despite the two countries meeting for 11 rounds of talks to thrash out a new comprehensive trade deal. The latest round ended last week in Washington without an agreement, as both sides appeared to steal their oppositions.
We're having a little squabble with China because we've been treated very unfairly for many, many decades, for actually a long time. And it should have been handled a long time ago, and it wasn't, and we'll handle it now. I think it's going to turn out extremely well. We're in a very strong position. We are the piggy bank that everybody likes to take advantage of or take from, and we can't let that happen anymore.
对各方表达的忧虑表示理解。
We have noticed the response from the international community and understand the concerns of various parties. Indeed, the escalation of the trade friction is not in the interest of any country and will drag down the world economy. But let me make it clear, it is the U.S., not China, that has started the trade dispute. It is the U.S., not China, that has imposed tariffs in the first place. It is the U.S., not China, who repeatedly resorts to putting extreme pressure on others. What China has done is totally countermeasure against the unreasonable actions of the United States and is purely self-defensive.
I think that the U.S. trade policy is a mistake. It is not going to lead to a better world economy or to the kind of success in negotiations that the U.S. government wants. It's using practices that, in my opinion, are wrong, in my opinion, are a violation of international rules by putting unilateral tariffs on for reasons that are not very convincing, in my opinion. Right now, the Trump administration is the most unilateralist administration we have had since post-World War II.
All right, for the latest on the slow-moving dispute between the two biggest economies in the world, our correspondent Sherwin Bryce-Pease joins us from New York. Sherwin, we know, as you said, the latest round of talks in Washington ending very abruptly late last week. Where do matters stand between the two sides right now?
Well, our understanding, Francis, is that there will be another round of talks. I mean, it hasn't officially been pronounced on. We understand that there will be another round in Beijing after a very brief meeting in Washington led by the Vice Premier of China that leads these trade negotiations with his counterpart here in the United States. We understand that this will be a trade delegation led at the highest level here from the United States. Treasury Secretary Steve Mnuchin will lead that delegation along with Robert Lighthizer, the U.S. Trade Representative. And really at the crux of the latest dispute was U.S. claims, Francis, that China was backtracking on things they had already agreed to in the previous rounds of talks. Now, while the principals of both those delegations haven't pronounced on exactly, the nuts and bolts of what the latest disagreement is, people close to those talks say it has to do with the United States insisting that China codify into law protections that relate to U.S. intellectual property, particularly as it pertains to joint ventures between U.S. companies and China's reluctance to codify into law these requests by the United States. So how we begin to understand this is that tariffs are essentially a symptom of what are really deep-seated differences that relate to U.S. views and certainly views around the world of China's unfair trade practices and really taking advantage of the rules that have been created through the World Trade Organization, which China joined in the early 2000s.
So is that the bigger issue, Sherwin? Because the U.S. president always just said this is about an imbalance. The U.S. importing more from China, more cheap goods often than it's exporting to China that could affect manufacturers in the U.S.
Yeah, that's very much Trump speak, looking at sort of the trade surplus, the trade imbalance as a sort of monetary figure. If China is importing $600 billion worth of U.S. goods and the United States is, for example, importing $900 billion, there would be a $300 billion imbalance. That is very much a symptom of what we are talking about here. The deeper issues are about trade between these countries and the fairness of that trade. When China joined the World Trade Organization in early 2000, they had agreed to open up their market to, for example, US companies, internet companies, for example, the Googles of this world have had a great deal of difficulty in being allowed to set up operations in China. China also demands that for joint ventures when US companies come in, and through those joint ventures, there's an insistence on the Chinese side that there be a transfer of technology. And through that transfer, certainly from the US position, there are now allegations of the stealing of intellectual property by these said Chinese companies. So these are very deep-seated issues. And the United States' insistence that China codify some sort of restrictions within their national legislation is where the sticking point right now is. So this is not just about trade imbalances and about the imposition of tariffs that have these short-term immediate effects, whether you're talking about consumers in China or consumers in the United States, or whether you're talking about the companies that are operating in both these territories. This is a symptom of very deep-seated issues. So let me give you an example, Francis. If you take the steel industry, for example, China invested in the late 1990s, early 2000s in their steel industry. China doesn't have the same types of labor laws that perhaps Western countries have, where they extend social protections, labor laws, healthcare to their workers. So it's cheap labor in China. China wanted to address rural unemployment, and so they invested a lot in creating steel. And so to the point that China then had a surplus of steel, they looked outside of China's borders to other markets, including at the United States. So you had this high-quality steel from China being imposed or certainly being dumped around the world at very low prices, and that then hurts the steel industry in the United States that then cannot compete with the very low labor costs that China has due to a lack of legislation, the one-party state, and a lack of critical media in that country. So that, in a nutshell, if you look at the steel industry globally, it really epitomizes what this dispute is all about.
But the dispute itself, some say, could lead to a slowing of growth in both economies. Given the entrenched views, Sherwin, do you think a deal is likely?
Well, President Trump keeps saying that, it's going to be a great deal. They're really close. He has a great relationship with President Xi Jinping, and that anything can happen. The Chinese, for example, are sort of stealing their backs here, straightening their spines, if you will, in the last couple of weeks, Francis. The China People's Daily, which is kind of the communist-run daily newspaper in that country that publishes in both English and in Chinese, posted on their WeChat account this week, and I'll quote it for you, Francis: "Negotiate, sure. Fight anytime. Bully us. Wishful thinking." And I think that's exactly where we are. Even if you look at diplomacy at places like the United Nations and in multilateral fora, China insists of a dignified, a sensitive approach, one of mutual respect. And I think they are now beginning to feel pressure domestically to stand up to what they call bullying from this White House. And certainly the tweets we see fired off by President Trump, there's a resistance coming from within China that China's dignity be respected in these talks. And I think this is where we find ourselves today.
All right, investors around the world are worried. Thank you for that update, our U.S. correspondent Sherwin Bryce-Pease.